Tomorrow is therefore the most important day of the entire month, and tomorrow's FOMC meeting could completely upend the roadmap for the fourth quarter of 2025. That's why it's more important than ever to have a clear plan in hand, so you know exactly what to expect and are optimally prepared for tomorrow. In today's video, you'll get a completely concrete insight into how I will take advantage of the FOMC meeting tomorrow, how you can actively benefit from the current volatility, what my personal trade setups are, and my overall game plan. I'll definitely go into more detail about that towards the end of the video, so make sure to stay tuned until the end today. It is really extremely important, and accordingly actually the very first interest rate cut taking place under the Trump administration. This is definitely going to be extremely exciting, especially Jerome Powell's speech. That's why in today's video I've prepared a clear roadmap for you, outlining my personal approach. Otherwise, feel free to like and subscribe if you're new to the channel. That would definitely support me a lot. Now let's get right into what's coming up tomorrow. We definitely have a relatively clear outcome. The market is pretty certain that at least one interest rate cut will take place. There's even a tiny probability of 3.9% that a double cut will happen. But just to put that into perspective for a moment, it's extremely important to me personally to mention that again. There are a lot of people out there who think that the more aggressively interest rates are cut, the more bullish or the better it is for the crypto market. But that's wrong, because if a double cut were to happen tomorrow, it would definitely not be a power move, as I also wrote on my X account, but rather a distress signal. A double cut would not be a sign of control, but definitely an admission that the situation is deteriorating faster than expected. And it's extremely important to keep an eye on the roadmap now, because things could definitely get very critical here, as current data clearly indicate that there are acute risks present. We'll get to that in a moment. But this is enormously important for the overall context, because we're actually about to see the very first rate cut since Trump was in power, or rather since 2025. And it's actually quite historic when we look at the current starting situation, because we have to keep in mind that the economy is not in the dumps and the stock markets are at new all-time highs. Let's take a look at what's happening with the S&P 500. And that's definitely not the norm, that new interest rate cuts are coming in when all the markets are near their all-time highs, or in the case of the S&P 500, are hitting one all-time high after another. That's actually pretty unusual, and that's why it's especially important now to interpret this scenario correctly, and also to take certain clues from the past to see if we've seen something like this before. And yes, these combinations have happened before in the past, even if it wasn't very often, but we've already seen it twice, once in 1996, then in 2019, and now in 2024. And we can now clearly take a look at the data right after this to see how the markets behaved back then, because it's especially important now to take a look at what the traditional markets are doing. We have to keep in mind that the roadmap for 2025 is also clearly dependent on the traditional market. So what are the major US indices doing? I also discussed this in the other YouTube videos, what my general roadmap is for the final phase. But it's especially important that we continue to get tailwind from the traditional market, that the S&P 500, so to speak, keeps hitting one all-time high after another. Because one thing cannot happen. It's simply not possible for the crypto market to enter a parabolic upswing, for Bitcoin to deliver extreme performance and the altcoin market as well, while at the same time the traditional market is crashing. So it really has to go hand in hand. Everything is interconnected, and that's why, in my view, it's especially important to look at the bigger picture. What are the traditional markets doing? And at this point I'm going to give you a little insight. I won't make it too technical now, so I'll just briefly summarize what the current state of affairs is here, so to speak. According to Bloomberg, when it comes to valuations of the current US markets, so these are official statistics, we are seeing some of the highest US stock valuations since 1992, and even higher than during the dot-com bubble in 1999. And that's really quite remarkable when we take a look at it. So, in general, the valuation, even if we consider other metrics here, for example the S&P 500. If we look at the current price-to-book ratio here, we can also clearly see that the S&P 500 is currently at higher levels than during the dot-com bubble in 2001. And that's of course extremely remarkable that the markets are currently valued so highly, and that's why it's definitely historic that new interest rate cuts are now being priced in, or rather that we can expect new rate cuts, even though the markets are already priced in at incredibly high levels, and on top of that, the current inflation numbers are also not ideal. We all know that the Fed is aiming for an inflation target of 2%, but as of now we are still at 3%. That's why, as mentioned above, the economy is not on the ground. The stock markets are at new all-time highs, just look at the S&P 500, but inflation is still running hot, and this is definitely a very rare combination. And so it's definitely important to understand why interest rate cuts are happening at all. Why is there even a reason, so to speak, that new interest rate cuts are now being priced in? And the main current reason for this is primarily the labor market. Here we see the current labor market data. I've also prepared a post here where we can take a look at the non-farm payrolls compared to the Fed funds. So at the end of the day, in the upper chart, we simply see the strength of the labor market. We see that every time the labor market crashes, or rather every time the labor market is weakening, the Fed acts reactively afterwards and then lowers interest rates accordingly, which is usually often too late. And that's why we constantly hear criticism from Donald Trump towards Jerome Powell, saying that he's always too late, that actions are taken reactively instead of proactively. And that's why it's especially important now to keep an eye on such a scenario to see whether there's a possibility for a soft landing or whether, in this case, it might already be almost too late, because we are definitely at extremely critical points. Every time the central bank has failed to get the labor market under control, we've definitely seen a sharp downturn in the traditional markets, and something like that must absolutely not happen, because it could potentially even lead to a break in the cycle. So we really need to be extremely careful here, especially regarding how Jerome Powell will assess the situation in his speech tomorrow. But that's definitely the current state of affairs. The main reason right now is a weak labor market, which is why all these rate cuts are being priced in. We can also take a look at the probabilities here, and we can see quite clearly that a lot is actually being priced in for the upcoming FOMC meetings. Of course, things like this are constantly changing, so this is not a guarantee for the future, but this is currently the overall market's assessment. That's why tomorrow's FOMC meeting is so incredibly important, especially when you look at the current data. And before I dive too deeply into macroeconomic factors, I want to briefly and simply summarize the whole thing. And the current situation is as follows. We're seeing interest rate cuts coming in while we're close to all-time highs, which is definitely not very typical. It's definitely not the norm for interest rate cuts to happen when the markets are extremely highly valued. That's certainly not the usual case. In fact, such a combination doesn't occur very often. But still, yes, we have definitely seen these cases in the past. So based on this combination, we definitely have clear reference points from the past, and that's exactly what we're going to look at here using this table. What happens when there's a rate cut at new all-time highs? And now it gets really exciting because every single time in 100% of cases, the S&P 500 rose within the next 12 months. And it's extremely important to take this data into consideration. As I said, here we have a complete overview. Anyone can take a screenshot of this, or feel free to follow me at VincentChalkCrypto on my X account. I always post these kinds of threads there. But here we can clearly see that we've had good performance within the next 12 months. Every time, so to speak, that rate cuts have taken place near all-time highs, the average gain was 13.9%, which is actually pretty solid for the traditional market. I know we're used to different numbers in the crypto market, but 13.9% is already quite decent within a year. It's definitely a strong performance for the S&P, and within the next 3 months, the median value was 3.3%. We can see it down here, 3.3% median value, after, so to speak, the Fed has cut near ATHs and the bulls lofted. Yes, this is basically the chart here, showing that every time we have the reference point where rate cuts were priced in near all-time highs, we then saw a correspondingly good performance. And that's why my plan remains absolutely unchanged at this point. As I've mentioned repeatedly in other YouTube videos, I still believe that the bull run is proceeding as expected, that we're right on track. Also, in terms of the overall structure, I would say things are definitely looking more than good. Of course, I also know that tomorrow will definitely be a decisive day and will probably trigger a lot of volatility. That's why I want to make my position clear here again, especially since I know I mentioned a bloodbath in the thumbnail, so we definitely need to be careful about what happens on Wednesday. Often, many market participants become too euphoric and quite often a kind of sell the news event takes place. But as I said, there is one thing I wanted to show you. In the long term, the roadmap definitely remains in place. In the long term, I am still bullish. We have very clear reference values and data in front of us. Of course, in the short term, if Jerome Powell speaks too negatively, it could definitely lead to a sell the news event. But we'll get to my specific trade setup in a moment, and I'll explain how I'm preparing for that. If a minor bloodbath occurs, if there's a small sell-off. But as I said, one more important piece of information. In the long term, I am definitely sticking to my plan, and I am positioned bullishly for the long run. I think that's become relatively clear now, based on the current macroeconomic factors and the latest data. Just to quickly mention it again for your information, in case this question comes up here as well, I'd like to briefly address one final point regarding the topic of stock valuation. We just discussed that many stocks are, in quotation marks, completely overvalued, or according to Bloomberg, we are seeing stock valuations at an absolute record high. But we have to keep in mind very clearly that if we compare the current situation to the dot-com bubble of 2001 or the early 2000s, we can see that at this point in time, there is definitely a correlation between the individual earnings, that is, the actual revenues of the individual companies, compared to the price, compared to the valuation. You can definitely see this in the data, especially in the case of Nvidia, where everything is in the green. On the one hand, we have this parabolic upswing, and many people claim it's just a bubble or something like that, but this so-called bubble is justified because, as I would say, the earnings are truly going hand in hand with it. Here we have a clear correlation, and that definitely wasn't the case at the beginning of the 2000s. Back then, it was purely a speculative bubble, and that's why you logically have to be cautious with such data when looking at stock valuations like these, because on the one hand, something like this can of course seem alarming. But if you look at the whole thing supported by data, at what's really happening in the background, if you look at the individual earnings, then it actually looks relatively sound. So there is also a certain justification for why the current stock valuation is so high. That's the current state of affairs, at least for now. And that's why I personally also believe that the S&P 500 still has quite a bit of room to grow, and that the traditional market will continue its cycle as usual toward Q1 2026, maybe even longer. Who knows, maybe we'll even experience a stretched, extended cycle. That's my current starting point in any case. By the way, I personally also don't believe that the Bitcoin cycle will end in the next 2 to 3 months, because according to the 4-year cycle theory, the Bitcoin bull run should already be over in 2 or 3 months. In my view, that's not the case. So I definitely expect that we'll keep pumping until Q1 2026. That's my current starting point in any case. Now things are getting a bit more specific. Now in any case, let's move on to my concrete preparation for tomorrow. Of course, it depends on when you're watching this video. Even if you're only watching this video on Wednesday, before the FOMC meeting, you can still prepare yourself optimally. At the moment, the structure looks very clean. We've seen this kind of thing quite often with Bitcoin. In general, yes, the current pattern is very, very typical. It's nothing new for Bitcoin. At the moment, we're in the current consolidation phase here, both in the bigger picture on a weekly basis. In any case, we're definitely back above our important resistance level, which we had for a long time. If the current weekly candle closes here as well above 115,000 US dollars, everything still looks very clean here as well. Even with my own indicator, things currently look very clean. So once again, we've got support on a weekly basis here. I've also explained in the video description how each of you can get this indicator completely free of charge. That's all for now on that topic. Otherwise, let's move on to my specific trade setup. What is the current situation? At the moment, we've clearly broken through this downtrend here. We have a nice structure on the 4-hour chart with higher intermediate lows and higher intermediate highs. Right now, the price is fluctuating a bit between the 0.5 Fibonacci level and the Fibonacci golden pocket. This is definitely the biggest resistance currently above us, so I think that's pretty self-explanatory. We have a lot of contact points here. It's kind of a make it or break it point. So basically, here is the bullish area, here is still a bit of a decision phase, and here is the bearish area. That's how I would describe the current overall assessment. Otherwise, important support comes back in at 113,000 US dollars. That's why I opened my very first long position here as well, specifically at 113,500 US dollars. Exactly in this area, I have another limit order set in case the market makers push the price down here. Of course, it's also a perfect opportunity for the market makers to take advantage of the FOMC meeting to create some volatility here. And in case there's a market maker move to the downside here, I definitely want to be prepared, which is why I've set up my first long position accordingly. So that's my position at the current time, and my next long position in a kind of, I don't want to say worst case scenario, but if Bitcoin does get sold off more sharply, perhaps because the FOMC meeting turns out to be a sell the news event, then it could actually drop down to $111,000. That's where the next support comes in again, specifically at the 0.236 Fibonacci level. So it's quite possible that there could be another rebound here because the structure would still be intact at this point. Higher intermediate lows, higher intermediate highs. It wouldn't be ideal for Bitcoin, but something like this is actually quite typical on such volatile days. We have to keep in mind very clearly that if we take a look at the liquidity heat map on a weekly basis, we can clearly see that there is still quite a bit below us. In fact, it goes pretty much all the way down to 111,000 US dollars. And that's why I've personally prepared myself here in case a market maker shift ever occurs. And here's another important piece of information for you. Even if I'm completely wrong now, or wrong in quotation marks, and Bitcoin pumps up through here to 118 or 120,000 US dollars, then at the end of the day, nothing is lost. So it's just a kind of preparation, just a kind of safeguard in case a sell the news event happens, so that I'm positioned accordingly here. Because one thing should be said, I'm already prepared either way. I have all my grid trading bots running, which are working passively here, and of course taking advantage of the volatility, buying at good prices if there's a small sell-off, and immediately selling high again. So that's definitely one of the best options you can go for. Set up a trading bot that passively profits 24/7 whenever there's increased volatility, even if the price itself isn't moving much. I've got some pretty good examples of that right here. We can take a look, for example, at XAP, which I really liked as well. Because in this case, we actually have a grid profit. So basically just the profit generated by the trading bot itself without factoring in any price gains of a total of 50%, which is really impressive when you consider that XRP hasn't moved at all. Here, we can see the trend P&L at this point. If I had just bought and held XAP, I would have only made about 2.6%. So basically almost nothing. It would have just been sitting idle in my portfolio, but thanks to the trading bot, I was able to pull out $170 here, a total of 50%. And something like that is, of course, an absolute dream. It's an absolute goldmine for a trading bot when there's extreme volatility, when the price does something like this, basically pumping straight up and down, just like we often see after FOMC meetings. And that's why, just so you're aware, I've shared my current setup in detail in my Telegram group. So everyone who's in my Telegram group, which as I said is completely free, has the opportunity to copy my current setup one-to-one. So by now there's also the option to directly copy trading bots, so to speak. I can basically give you the exact link. From my best top performers, in other words, my favorite trading bots, I've shared my top 3 with you in the group. So anyone who still wants to prepare for tomorrow will be perfectly set up here. I've also explained in detail here via audio what my plan is, just like with the live trades. So you also know exactly what my plan is here, so to speak. We also perfectly caught the last trade at 108 to 108,500 US dollars. So it was exactly in this box that we went long last time. We also closed the trade perfectly, so you'll definitely always be kept up to date there. I've explained in the video description how each of you can join in here completely for free. It's definitely worth it because I'll be giving you live updates there as well regarding tomorrow's FOMC meeting, so you'll definitely be in the know. So that's definitely my concrete plan for now. Of course, feel free to write in the comments what you expect from tomorrow. I'm definitely really curious whether we can expect a green day here or if it will actually turn red in the short term, meaning a little sell the news event happens. Personally, I'm definitely curious. At the end of the day, it has to be said clearly, no one knows what will happen tomorrow. So for me personally, it's also incredibly hard to assess how Jerome Powell's speech will turn out. And please don't let other YouTubers push you around or anything like that. Have a clear plan, prepare yourself well, and then you can start tomorrow and the upcoming FOMC meeting completely relaxed. I think my roadmap is relatively clear, and for me personally, it's always extremely important that I provide a clear structure and a clear roadmap in my YouTube videos. There are other people who just talk about news or whatever, but I really want you to get clear value here and truly understand how the individual connections work, what the bigger picture is, where I might have concerns or where you might even need to hedge yourself, and also, yes, what is my own strategy, my own approach. I think you definitely know what's going on. I've linked everything in the video description so you're informed. I also don't want to bother you with ads or anything like that at this point. You can take another look at everything in peace whenever you like. I think you definitely know what's going on. Thank you very much for your attention. I'll definitely be active in my Telegram group tomorrow as well, keeping you updated of course. Feel free to share your thoughts in the comments, and then I'd say the next update video will be released after the FOMC meeting. We can definitely analyze together here how the roadmap might have changed after the FOMC meeting, after Jerome Powell's speech. Personally, I'm extremely curious to see what happens. Of course, I'll be there for you tomorrow as well. Otherwise, thank you very much for your attention. Like and subscribe. See you next time. Ciao.